more of your paycheck next year. I talk with a local tax expert about the changes headed your way starting in 2024. Inflation has been hitting many of you hard, and to help keep pace with increased costs, the IRS announced last month higher tax brackets and higher standard deductions.
Because of those increases, they are making the tax system mirror those adjustments as well to make it more fair to the taxpayer.
Meaning you could keep more of your paycheck next year.
I've ran a few scenarios for like an average couple that makes about $120,000 a year in taxable income. These changes could potentially save them $2,000 to $3,000 in a year.
Flaminius Ching, a certified public accountant in Elk Grove, says think of tax brackets like layers in a cake. When there's inflation, the IRS changes the size of the layers.
What happens is they're basically going through and expanding those ranges of those layers of that cake.
Here are some key changes. The standard deduction for married couples filing jointly has gone up $1,500 from last year to $29,200. For single taxpayers, the deduction is now $14,600, a $750 increase.
It's important to the taxpayer is that when these ranges increases, if their income is relatively the same as the year before, they will, in essence, pay less taxes over the course of that tax year.
The new tax bracket changes are based on the Consumer Price Index, or CPI, and are adjusted each year. For 2024, they were adjusted 5.4%. That's less than last year's historically high adjustment of about 7%. Also, the IRS adjusts for pre-tax contributions to your 401k.
You could put more money away and therefore sheltering it from income to begin with to be taxed.
So overall, it's an upside to the persistent inflation that we've been dealing with. And remember, these 2024 tax year adjustments generally apply to the income tax returns that you will file in 2025.
We love all the good news we can get, right? Any other tax advice as we head into the new year?
Yeah, there's some things that you want to keep in mind. Flaminius says that you should double check your 401k and your pay stubs, and then make sure that you're contributing enough to your 401k to get your company match if they offer one, and to reach your retirement goals. Also look at your tax withholdings in your paycheck. Compare your federal and state withholdings to what you've been owing in taxes. It's going to require you to crunch some numbers or talk with your tax preparer, but trust me, it is all about avoiding surprises come tax filing time, because sometimes money surprises aren't really a good thing, right?
Hey, nobody got time for that, right?